Hello, hello, hello. Welcome to Trading Made Easy right here on YouTube. I'm certainly glad you found yourself here. And for those of you that are new to the channel for the very first time, welcome. But let me speak directly to you just to ensure that you are in the right place. You're at the right channel. I teach simple, easy trading methods that's designed to get 20 to 25 pips consistently. This is the home of the 20 pip community, and I identify these pips. Now, can you get more? Absolutely, but we secure the base. We secure the base. And so you're not going to see a whole lot of graphs and lines and channels and things like that, though nothing's wrong with it. It works for a lot of people. It doesn't work for me. I like a very clear, clean chart, as clear and clean as possible. And that's been working for myself and all those that I have taught. And so if you're looking for simplicity, this is the channel that you want to be connected with. 20 to 25 pips is the base. Also, I only trade one pair, and that's GJ. However, my foundation for my setups is strictly based on market structure so that everything I do teach can be applied on any instrument. And so you'll find benefit here if you're looking for simplicity and you're looking for consistency. Now, there'll be other videos where I talk more in depth about the power of one, which is what that's my objective in my training, but that's on another video. Okay, so today we're going to do a recap of the week. It's been a phenomenal week. Thus far, up over 300 pips thus far. And I want to share with you my simple setup. My simple setup, in essence, it is my trading plan. And hopefully you'll find some value in that, right? So the first thing that I do is I head over to the weekly, right? So we're going to just do this quick recap as we go through my trading methods. So when I'm on the weekly, I'm just simply looking for the overall trend, and I'm also looking for where price has stopped and turned around on the previous weekly candle. On the previous weekly candle. Remember, this is a weekly candle, so I don't need to go too far out in that unless you're a swing trader. So this is my active candle for the week. So this candle right here is the high and low that I'll be looking at. Now, because the wick on the previous high is lower than the wick on the current high, I just use that high as my benchmark. So that's why we have this line, the red line dropped here. Now, the support for the previous low on the previous week's candle, you see the red dropped here, and they kind of, in the same region. So that's the idea. And so we've identified that. We've framed the high and low on the weekly, and then I drop down to the daily and I do the same thing. Now on the daily, we're just drawing in closer, right? We're going deeper into that weekly candle. And so what I'm looking for on the daily is the previous daily's high and low, just like the weekly, right? So the previous daily candle right here, the high is right there where the pink line, the low for the support is right here where the pink line. So now I have my weekly high and low, my daily high and low within the weekly. We're just drilling down. We're drilling down to a place where we can identify a good entry. Now, because we're still on the daily, I do like to see where the price stop and turn around on the daily relative to the active candle. Now, obviously, we can look up here and see that price did turn around here. But again, this is the daily candle too far out. This candle is in August. I want to stay a little closer because, again, we're just identifying 25 pips, right? If you want more of an extended intraday position, then you can look further out. If you want a swing position, you can look further out. The method is the same. right? What you're looking for is the saying. You're just going for more pips, which means it'll take longer for it to happen. It takes longer for price to get to your entry. That's all it means. And of course, you're going to ride it a little longer, and so you'll be weathering the storm if that's the type of trader that you are. At the end of the day, entry is everything. Entry is everything. You can certainly identify your structure. You can identify a really good setup, but if you enter in wrong, it's going to be a bad day. Okay. So with that being said, when we see, so we have our high and low on the daily. And of course, we identify the trend on the daily as well. And the trend is bullish, right? So we have a bullish trend on the daily, and we have a bullish, the overall trend is bullish, right? Is bullish. So relative to the trend, this is where you want to dissect a little more. So we see that on the daily, we are bullish. We want to identify the high and low from that standpoint, right? So that we can determine what price is doing right now. That's the key. So you want to find out, where is price? How did price get there? And where do we go from here? Those are three very, very pertinent, very, very crucial questions that you want to ask yourself on every time frame, because that's going to help you to look at what you need to see so that you can properly analyze what price is doing. If you don't know what price is doing, you will be guaranteed to be lost in the market. And so we never want to lose sight of what price is actually doing. Is it in a continuation? Is it in a correction? Is it in a range? What is price doing? What levels did price break? Right? That's going to tell us, how did we get here? Well, we get to a particular place in price because previously there has been a break. Simple stuff, right? So we want to be able to identify that. That's the key. Okay, so let's move it on so we won't be here long. Hopefully this is helpful to you. And if so, go ahead on and hit that subscribe button so that you can stay connected to the community. Okay, so where was I? Okay, where was I? Alrighty. So on the daily, what is price doing, right? So price reached this high on the daily, right? This is when I like to break out my fib. When we got to this point, we did not break. We did not come back above it at this time. So this is the high. And we're going to take it down to swing high, swing low, which is right here where this wick stopped. So the reason we're doing that is because we want to see what price has done since it did what? Since it broke structure. And now that I put the fib on here, we can clearly see where price broke structure. We was bearish. We was in this correction, right? We was in this correction until price broke above our trend line on the fib, which is at the 50. So when we broke the 50, we typically react. That's a golden zone. So there will be a reaction most of the time, or rejection most of the time. So we expect to see a pullback from the 50 typically to the 38. That's pretty common, but it can do whatever it wants. I'm just speaking based on patterns and tendencies, right? Especially with GJ. But this process and method can be applied to any instrument, as I mentioned before. So we broke the 50, and then we pulled back and retested that 30, right? And then of course we're above, right? We're above and reached the 61.8. So now we're on the other side of the trend line, and we're on the bullish side of the trend line, basically, right? We're on the bullish side of the trend line, and we see now where price is playing between the 618 and the 38. So we're still bouncing around, trying to determine if we're going to break further to the upside. Now remember, we have our weekly high and weekly low, which are strong areas of support and resistance as well. And isn't it, well, it's not a surprise that our weekly high aligns with the 618, right? strong areas of what? Rejection. Rejection. So for price to continue to the upside, what do we need? We need price to break these strong areas of rejection. If it doesn't break it, it's going to play between the 618 or the weekly high, right? And the weekly low or the 38. That's where it's at, right? And they align with our weekly structure. So until price breaks one of these areas, high or low, we'll have a more definitive viewpoint as to where price is trying to go. But while in between the two, there are a lot of pips that you can capitalize on. Remember, we're going for 25, right? But there are a lot of pips that you can capitalize on. So even if we looked at the daily support to the weekly high, that's still 206 pips that you can play around with. That's available. What we have to determine is entry. So I hope that method has made sense to you in determining where price is, and the position you should be taking, right? The position you should be taking. Now, because we're on the opposite side, the upside of our trend line on the fib, we may want to look at a potential buy opportunity. That's one indication. Now, the other indication of a buy opportunity is where price is now. Where did price come from at this point, right? So here we are on the daily, and we may need to look further down, correct? Now, let's look first the previous candle, right? It closed where? Close to our support area. So we are in a demand area. We are in an area of support where we may see price push up, right? So now let's break down to the 4 hours so that we can get more data to support the potential what? The potential buy. Alrighty, so remember, this is our daily support and price is hovering around there. So price came down. This was on yesterday, the 25th, right? We danced, we sat right on the support level. We did not break it, right? We pushed off of that support level. So there was a buy opportunity there. And this is where what we see now is a reflection of this position here. So we're in an area of demand. Now we've moved past it. So let's see. We've moved past it and we have about 58 pips 58 pips from this support move here. So one can say we kind of missed that initial move. So with that being the case, we want to wait for price. If we're going to be buying, we want to wait for price to pull back down, pull back to the area right here. It didn't break beyond this area. Now this wick tells me that we want to get down here. So you can certainly put your position here for a buy, right? Or you can put it at the daily support for a buy and push back up, right? So that's an option. For a buy, certainly I would not get in at this point. I would be looking for that pullback. And then I'll position myself for the buy. And so for the sale, same thing. Basically, let's take a look again. Let's take our fib on the 4 hour and go from this swing high to this swing low right here. Okay. So remember, we're drilling in. We're drilling in. And so what we see now is price is still under our trend line on the 4 hour. So where are we? We're in seller's territory. Remember, every time frame has its own trend, and each trend is a smaller trend within the big trend. So the overall direction price is going in is bullish. But for our intraday, our scalping, then we want to look at the smaller trend within that overall trend. Will price eventually go into that continuation, the big move? Absolutely it will. But there are many opportunities for you to obtain your pips on the smaller time frame. And if we decided to do that, we need to know what price is doing on that time frame in relation to the big trend, right? And so on the 4 hour, we're still bearish on the 4-hour. Now we did, this 4-hour candle is above. We just opened above our trend line. So we could see price pushing back up into the 50 time frame, which is the daily resistance area. It lines up perfectly. So we may see price push back into this area. So there may be a small opportunity for a buy here. There's roughly 31 pips, right? And so that may be a small opportunity there. 25 pips again is what we're looking at here. Okay. And so, yeah, so our 50 is our daily resistance. That's our daily resistance. Now, what else may typically happen when we get to the 50? We may see price push back. So because this is the daily resistance, is in alignment with the 50, which is the golden zone on the fib, we can expect to see price potentially, I have to say that because there are no guarantees, push off of here, reject off of here. So this is now a sell opportunity. Okay, you can buy it up to resistance and sell it from this from the 50 back down to maybe even the 38 or the trend line, the top side of the trend line. Simple stuff, guys. If this is resonating, if it's simple, if it's simplistic, if you think that you can do this consistently, subscribe to the channel, because I say the same thing over and over again. I do the same thing over and over again. So just by default, it's going to register, right? It's going to register. Entry is key to all of this. Entry is key. Okay. So our high and low that we identified before we even pulled the fib was already done, and it lines up with the key levels on the fib. So we did it with price though, which is what you want to do. And then bring in your confirmations to confirm what you've already seen, okay? What you've already identified. Now that we go down to, so we already know our levels are areas for potential buy and areas for potential sell. Right there. That's it. That's it. Grab your 25 and be done. That's it. So you have your potential areas here. And that's all I do. I frame it up. I confirm it with the fib. When it lines up with the golden zones on the fib, we are in business. We are cooking. We are cooking. And then you just simply go to your 15-minute and put your alerts in and wait for price to meet your criteria. It's that simple, guys. And so what we're looking at now, as you can see, the buy opportunity, you see more data, and we are headed to this 50. And I will be waiting right here for a sale to bring it back down to 20, 25 pips. It's just that simple, right? So that's what we're looking at now. And overall trend is bullish. That is the overall trend. And we have bullish opportunity here, and we have bearish opportunity here. Same thing. So we can seesaw this thing down and be good to go. So hopefully this recap has helped. Let me just say this also before I take my trade, and I highly recommend this. This is what I teach. Pull in the remaining of your confirmations, because you should have confirmations to support your analysis. You never want to enter a trade strictly on one thing. Never, ever, ever, right? Pull it in. So I pull in my MACD and my moving averages. So whatever it is that you're using, pull it in, and it should support the direction that you're going in. So with that being said, I'll see you on the week, the end of the week recap, which is tomorrow, by the way. So let's see how these buys and these sells play out. Have a great one. Bye-bye.